I'm Ben Reppond. Welcome to my YouTube broadcast. Today is August 27th, 2025. The market, the stock market, has continued to go up, not so much on the bond market, but the stock market has gone up and up and up, doing really well. And of course, gold and silver have been going up and up and up. So I'll report on both of those. I'm going to begin with the dashboard, and this will be the 6 major equity indexes, at least I think they're major, and then the long-term government bond ETF, TLT, and the 4 U.S. equity indexes, Dow, S&P, NASDAQ, and Russell 2000 small cap index, and the two foreign indexes, EFA for the developed markets and EEM for the emerging markets. The combination of those 6 gives you a really good view of different types from an ETF standpoint, gives you a view of different aspects of the market. So you can see here that nearly everything was up last week in the yellow box. NASDAQ 100 just was down slightly, everything else positive, including bonds. And then year to date, all the equity indexes, the first 6, are all positive. So, and then to the right of that, which ones are above their 20, 50, 100, and 200-day moving averages? All of them except bonds on the 200-day. Other than that, everything's positive. So quite favorable. There were 27 out of 28 above their moving averages, and last week it was 24. So continues to go on up. This is a favorable, positive market. There are people who think it's going to come down. It needs a correction, probably true, but I don't try to second guess that. We use a tactical approach that tells us when to be in and when to be out. Otherwise, I'd be flipping a coin or giving my opinion and telling you what I think. And, people who do that, they may be right 50% of the time. That's just not a good track record, in my opinion, for managing money. Okay. Next are the 11 major industry sectors, and these are listed from top to bottom based on year-to-date performance, and all 11. To the right, on the right side, where are they relative to their 20, 50, 100, and 200-day moving average? Again, 2 out of 44 are negative. 42 out of 44 are positive, and that compares to 36 a week ago. So again, you'd say a lot of breadth in the market when you see it across, all of the sectors and all of the those 4 moving averages. On a year-to-date basis, everything is positive. You can see in the red box. This is what the S&P weekly ETF SPY looks like over a 3-year period, and at the very end, you can see it's gone up and down, up and down. You see that big pullback where it went down. That was April, and then it took off from there and kind of formed what we call a V shape, a very quick recovery, and that's a very positive indicator. And for those who think the market is going to go up, they look at something like this generally as positive. If there's a correction, it would likely be based on historical data, probably fairly small. I look at it on the candlestick chart, and this same thing, the same data, except it gives you a little better view on when it goes up was, represented by a hollow candlestick, and down by a red, just another view of it. And then I put since January 1 of this year, again, you see the same thing, the V shape, but just a little more micro view of it. And then at the very end, I put a red arrow to show you last week. Last week, was was positive, but it resulted from, at the very end, a very favorable day. And that favorable day compensated for the negative days that preceded it last week. And that came from the indication from Chairman Powell that there is likely to be a rate cut by the Fed in September. NASDAQ, relative to the S&P 500, relative strength chart showing which one is stronger. So at the very end, you see that drop. Well, that indicates that the S&P was stronger than the NASDAQ. And that's the way it is. When it goes down, it favors the S&P. So, but overall, from the beginning of 2023 to present, this basically favors the NASDAQ. And then the SPY-G and SPY-V, growth versus value. When it goes up, it favors growth. Goes down, it favors value. Somewhat the same thing, except more a little more dramatic. And this is even more dramatic. This is the S&P, represented by SPY, compared to IWM, Russell 2000 Small Cap Index. And the drop indicates a favoring small cap. Small cap had a very good week last week, so that drop represents that. But overall, from the beginning of 2023 to present, it has favored large cap, which is SPY. Long-term government bonds, represented by TLT, has been going down. This is a 5.5-year chart. Been going down in general for 5.5 years. Now, what's significant about this, for people who have a buy and hold 60-40 stock and bond portfolio, this is the 40%. This is 40% of those portfolios, or something like it. Maybe it would be some government bonds, municipal bonds, or corporate bonds, or intermediate term bonds. There's all kind of bonds, but anything that is high quality, like U.S. government bonds, which most portfolios use that for counterbalance. This is the 5.5-year view. That is why I don't believe in 60-40 buy and hold portfolios, and it's why I don't use bonds. Now, when interest rates get to be 15% or higher, I'll probably be the bond guy out there. But right now, no, I don't see it making any sense at all. Then an 18-month view. So this shows you the general direction in a more shorter term view of it. The dollar has continued to decline since the beginning of the year. And again, it's weakening. This makes it favorable for foreign investors to invest in the U.S. and less favorable for U.S. people who are buying goods and services internationally. The dollar doesn't go quite as far, but it's still strong relative to other currencies. Gold, as I said, gold is continuing to do well. Look at over that period of time, the amount of time that it has stayed above its 20-period moving average a lot. And it's still not quite touching it, but it's still above the 20-period moving average. Very strong, around $3,400 an ounce for gold. And silver is doing very well. Again, you see more extremes in silver, where it will go down more and go up more, but it's well above its 20-period moving average on the 3-year weekly chart. And again, it's around $39 an ounce on the spot price. I'll cover that later. Bitcoin kind of flat, did not go up or down very much last week, but again, still above its 20-period moving average. Volatility. Now, volatility index, called the VIX, VIX, When it's going down, this represents that the market, the equity market, namely the S&P, is usually going up, that there is less volatility in the market. So again, from early April, it has come way down, and that's represented by the chart. I showed you that V chart where it's going up. Well, the inverse of that is the volatility index, and it's come down accordingly. Using South Korea as a proxy, you see that this is relative strength. The U.S. market, not the economy, not the dollar, but the U.S. stock market has weakened since the beginning of the year, and using South Korea as a way to measure that. This shows the degree to which, in this case, South Korea has outperformed the U.S. equity market. Many other markets are similar to this. I just like showing South Korea because it's a good chart. And you can see the period of time where the U.S. outperformed South Korea, but now it's turned around, and the U.S. is lagging not only South Korea but other international markets. Okay, gold and silver. Gold, $3,418 spot price as of Friday. That's up 2.5% over the previous Friday. And silver, $39.05, up 1.7% over the previous Friday. The gold-silver ratio is 88-1. A monster box, which is a good way to buy it. If you buy it, you don't have to. You could buy a single, ounce if you want, or a sleeve of 20 tube. But if you buy a box, that's 500 rounds of generic silver, and just short of $20,000 for a box, $19,660, including the markup, which is very slight. And that's an indication that, my opinion, that demand is strong, and that represents $39.32 per ounce. Provided to me by my son, Preston. Okay, if you have questions or comments, leave them in the comment section below. Thank you for watching.